Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com, and it's Monday, February 2nd. Let's look at United Rentals. Here's why. I had an exchange with Jim Cramer last week and into the weekend, not about who was going to win the Super Bowl. By the way, the better team won. But I wanted to, he was asking me basically what I thought about the market and what I liked and essentially what I didn't like, because I'm a little bit cautious on the market. Through various dialogues, I said I think United Rentals goes lower. Now, Cramer will have already covered this in Mad Money Off the Charts by the time you're watching this video. We bumped it up from Tuesday to Monday because I said I was ready to roll. So let me explain to you my reasoning, because I'm Dan Fitzpatrick and not Jim Cramer, so I have a little bit different, different explanation on it. Here's the deal. We'll just kind of start at the beginning here. Okay, the S&P. Hope springs eternal. Every time this thing comes down and tests 2,000, look, boom, moved up. Boom, there it moved up. Insert your boom now. And then again, boom, it's getting ready to move up. But I'm looking at this and I see, kind of a diamond pattern here. You can find whatever you want to in a chart. You really can. But various things that you find actually do matter. So I'm looking at this and I see a big potential for a more meaningful sell-off, which, by the way, ultimately should be bought, but we're kind of due for another little pullback like this. So with this pattern, I see a move, or I see the potential for a move lower. Therefore, I don't really think it's a great time to be buying stuff. I mean, there are always things to buy that are trending. They're always giving you opportunities to get in. But that list is getting fewer and fewer. They're still there, and members, better watch the strategy session tonight because I'll share some of them with you. So I have kind of a real cautious outlook on the market. So I was looking at the various ETFs, and one of them that was really not doing too bad relative to the others is the XLI. That's the industrial ETF. But you'll see, if you know anything about the ADX indicator, and I taught a webinar on this in, I think, the first or second week in January on how to use the ADX. It's a directional indicator. And it's starting to flash some real, danger Will Robinson signals here. And so I thought, well, I'll go through and look at the various components in this sector. And one of the kind of sub-sectors in the industrial space are these rental and leasing agencies, auto dealerships, or not auto dealerships, but, well, yeah, they include there too. And so as I was looking through them, one of the stocks that I actually liked the most for quite a while, I was long the stock for quite a while. I forget exactly when I sold it. No, I didn't sell it right there. But I really liked the stock. And then ultimately I got rid of it. Well, you can see where this volatility has become really, really high, as opposed to, generally speaking, kind of a nice little uptrend. I mean, look at the difference here. Basing pattern here for essentially 2013, big sell-off like a lot of other things, and then a nice move higher. But if we go back to the weekly chart, you can see here, from the 2011 low to the high, we get about an 800 handle. 800% this stock has rallied in 3 years, if we're counting to here. The reason I'm saying that is this. This is no secret to investors. This is no, if you're first learning about this stock, I don't know what to tell you. So this move is no secret to investors. United Rentals has been on a lot of people's watch list and own list and this and that and the other thing. So after an 800% move, The numbers are still good. Oh, I think they've got really strong revenue. Their PEG ratio, PE divided by growth rate, is very favorable. They're supposed to still be growing, et cetera, et cetera. Okay, that's great. I love the company, but I think the stock is not where you want to be. I mean, look at this chart. This looks like water pouring out of a garden hose. Coming down. Okay, this is the weekly chart. Clearly, now I sound like a really bad attorney arguing to a judge, because, by the way, any good attorney knows that if they're in court, the last thing they should be saying is clearly, unless that's the last name of their client or something, because nothing's ever really clear. Otherwise, you're not talking about it in court. With that said, clearly, the trend has been broken. The 40-week or 200-day moving average, bounce, bounce, oops, no bounce there. So we're getting a lot of negative divergences here in MACD on the weekly chart. Heavy volume here, all to the downside. So I don't like this. Now, because if you're an institution, you know, a value guy, and you've held the stock, you're a mutual fund or whatever, at some point, don't you think it's time to sell, or at least say, I don't want to buy anymore? So I think buying pressure on this company is, in my view, this is obvious. The buying pressure has obviously gone away. I look at this and I cannot make a bullish argument for this stock. Sorry. If it gets down to 60 or so, maybe, because that's here. But typically when you're in 2015, a breakout in late 2013 isn't particularly relevant to, you know, the future support merits of this level. In other words, 60 bucks. So I'm looking at United Rentals, and everything that I see tells me that we got a lot of resistance here. I mean, there's a lot of resistance, and I think if the stock happens to bounce up, 90 bucks, great. 95, 100 bucks, this is a gift. Short the snot out of this stock. Make sure you keep a buy stop someplace, because I don't want to be getting the emails either from broken-hearted, broken traders, or, pissed off people telling me that the stock's at 200 bucks and they went broke. So you got to have a risk management methodology in any trade that you have. But I will say this, if the stock rallies, and it looks like it could for a few days, wait for the stock to give you signs of rolling over. Don't just be a knucklehead and stand there in front of the stock and say, well, I'm going to short it now because I'm sure that it's going to roll over soon because, hey, Dan said so. No, you wait for the stock to show you where it's rolling over. You short the stock. You put your buy stop in right about there. I'm just putting this here relative to this line, not relative to this red box. And then that's your trade. So, okay, hope that helps. And you may want to go to the CNBC website and check out Cramer's version of this stock, because I'm pretty sure, I know he likes the company, so I'm pretty sure that in that CNBC segment, he's going to give you his bullish thesis for the company. It's probably going to be a pretty interesting deal. So, oh, by the way, double top.